must be happy and excited
Hi, good
and
morning.
relieved because your core positioning, which was centered around consumption and domestic and MNC pharma, all the stocks have outperformed and all the stocks have outperformed very handsomely.
Yeah, it's been a very good journey for the pharma sector over the last few months. And more specifically because we had seen a lot of correction over a 3-year period, which made valuations far more attractive than many other parts of the market. And most of these companies, as you all know, sell in over 100 countries. They have strong brand equity in domestic markets and have much better longevity than maybe 50-70% of other companies in India. So I think these are solid businesses getting their due in equity markets.
And they have already, Sailesh, but what's the case from here onwards? Will they continue to give these kind of returns and at such a fast pace? You know, Pankaj was just highlighting the kind of growth prospects some of the top league pharma majors are sitting at, the kind of approvals which are in the pipeline, the product pipeline, etc. Do you believe that they can show sustained growth going forward from here as well? And will the stock markets then reward that? Because these stocks have already moved quite a fair bit.
See, you have to see this market, the pharma space, in the context of what has happened in the last 3-4 years. You're talking about the recent returns which have come about in the last 3-6 months in the equity markets. But if you look at it, they had 3 significant years of underperformance. During the same period, the alternative market, the other sectors in the market have done exceedingly well, and they have actually were trading at a premium. Only that premium has now narrowed down. I think that is what has actually happened. The whole earnings revival cycle for the sector is yet to play out. The share of domestic profits in earnings of a lot of these Indian companies are yet to be is already increasing and is getting visible. That is more sustainable and get very good valuations. A lot of businesses in the domestic branded space trade at material discounts to consumer businesses having similar characteristics. So that's one thing which is there. So I think the key thing will be earnings recovery, and the currency depreciation does provide a very positive tailwind over the next 1 to 3 years. In the near term, because these companies are hedged, earnings might take a little bit more longer to show the reflection of a revival, but I think the currency tailwind does support earnings for these particular companies over the next 1 to 3 years.
Sailesh, so I want to go back to where the positioning of generics is. When we spoke to a Sun Pharma or a Lupin and Aurobindo Pharma both on the record and off the record, they are acknowledging that the pricing power is getting better and price erosion may not happen, but they are also indicating that complex generic launch is still a distance away. Sun Pharma is talking about 2021, Lupin is talking about 2021, 2022. So from a market standpoint, pharma may have bottomed out, but the earnings recovery, some would argue, at least for US based generic companies, is still a distance away.
Yeah. There were two issues, like you rightly said. There was significant price erosion. Now the commentary from a lot of leaders in the space is that the erosion is reduced materially, and it is now to a large extent normalized, unless you have extremely profitable products and where there is new competition. So directionally, the pressure on earnings, which was coming purely from the US space, is starting to ease. Second, I think one of the big things which are, I think, a big trend in this space will actually be realignment of costs. A lot of these businesses were growing at 20-25% prior to the last 2-3 years, and they were designed for that kind of growth. So their cost structures were very different. In fact, a lot of R&D which went through had even maybe 5-year, 7-year kind of spends into it in some parts of the component. I think a lot of this realignment will also support earnings recovery in this space. Typically, from a revenue standpoint, if you just see, a lot of these companies were spending about 10%, 12% of their revenues as R&D expenditure. And if you just take it as US revenues as R&D expenditure, it was 18-20%. I think given the attractiveness of US market has definitely reduced from a point of view of profitability, you will see a realignment of these costs. Small realignments in these costs lead to supporting earnings materially. And third is the currency tailwind. Also, not to forget that the domestic space, which is now doing very well, after the initial GST impact, and has now started to become maybe 40%, 50% of earnings of all these pharma businesses. And I think and that's a pure secular branded generic space in India, which has got many, many years of growth ahead. And as percentage share of these businesses also rises, the general support to the multiple remains. So I think we are having multiple tailwinds. Yes, there has been a very sharp rise recently. Yeah. You also mentioned about the specialty portfolio. I think we have to give them credit that the investments in the specialty piece are happening, and those investments are primarily being written off to the P&Ls today. Hence, their earnings do appear naturally more depressed or more compressed than you would have in a comparable or any other sector in the space. Hence, directionally, once you start seeing a recovery of growth, I think people start looking at these businesses from a 3-3-year point of view, and then you start seeing this as earnings revival opportunity. And inherently, these businesses can actually get 15% kind of earning compounding because of cost benefits, because of revenue comeback, because of stability in US operations, because of rising share of domestic profits. So directionally, the sector is on a good trend.